taxation, investment strategies. We all know him as someone who brings a lot of depth and vision to APMI's mission of strengthening the PMS ecosystem. Please put your hands together, everyone, as I invite on stage Mr. Bihari Lal Deora.
Thank you. Good morning and welcome to all of you. Esteemed Chief Guest, Honorable Chairman of SEBI, Mr. Tuhin Pandey, our guest of honor, Shri Ashish Chauhan ji, distinguished members, respected dignitaries, valued partners and friends. A very warm welcome to each one of you. It's both an honor and privilege to inaugurate with our chief guest the second annual event of Association of Portfolio Managers of India. First and foremost, let me extend heartfelt gratitude to our chief guest, our guest of honor. Your presence is a source of inspiration for all of us. It signifies not only your personal commitment to the highest regulatory standards, but also the enduring and constructive partnership between India's portfolio management industry and the regulator. Your insight and vision have been instrumental in guiding our industry towards greater transparency, innovation, and investor protection. Thank you for your support and for gracing this occasion. Founded in December 2021, APMI has aimed to be unified and credible voice for portfolio managers across India. From day one, we have worked alongside regulators, stakeholders, our members to raise the bar for transparency, professionalism, and ethical conduct. Through our dozens of formal submissions to SEBI and authorities over the last 3 years, we have played an active role in shaping regulation, addressing industry challenges, and building bridges of trust within the market. Today, I'm proud to share that we present over 320 plus SEBI registered portfolio manager, accounting for nearly 96% of PMS industry AUM, making APMI the undisputed custodian of industry's best practices and the collective voice of our profession. This year, our landmark initiative has been the launch of online distributor registration portal, which was implemented with the unique APMI registration number for NISM certified intermediaries. From January 2025 onwards, our distributor marketing PMS products in India will be formally registered with APMI, and I'm glad to announce that we have almost 20,000 people who have registered on the platform. I'm also delighted to highlight a special features of today's program, the much anticipated sports session scheduled for this afternoon. This tradition of APMI annual event, now in its second year, brings together members and stakeholders away from conference table to foster networking and teamwork. I encourage everyone to relish this unique opportunity to connect informally and celebrate our community spirit. To our members, your collective wisdom, unwavering commitment for the investors of this country, engagements are the backbone of APMI. Whether through contribution to consultation papers or by participating in our governance committees, you drive our association forward and embody the spirit of professional excellence. As we embark on today's sessions and sporting events, let us reaffirm our shared commitments to raise standards, foster innovation, and enhance investor confidence. Together, under the stewardship of SEBI and through the engagement of all stakeholders, we are getting the foundations for responsible and robust growth in our industry. With that, now I have an honor and privilege to invite our chief guest, Honorable SEBI Chairman, Mr. Tuhin Pandey, on the stage for sharing his insights. Thank you, sir.
Mr. Ashish Kumar Chauhan, MD and CEO NSE, Mr. Deora, APMI Chairman, Mr. Bansali, APMI Vice Chairman, APMI Board Members, market participants, members of the media, ladies and gentlemen. Thank you for the opportunity to address you at APMI's Annual Conclave 2025. It's a privilege to be among professionals shaping bespoke wealth management in India. I urge you to use this event as a sounding board. At the end of it, each of you should have at least one key takeaway for your business. Today, I want to share my thoughts on the evolving portfolio management services industry and reflect on its opportunities, challenges, and responsibilities as a differentiated provider of wealth solutions. Why PMS matters today? In 1993, SEBI brought PMS under its regulatory ambit at a time when India's GDP was a modest US $279 billion. Back then, personalized wealth management was a luxury, an idea way ahead of its time. It was a service that only a handful of pioneering managers offered, relying on personal relationships rather than formalized processes. Bringing PMS under SEBI's regulatory ambit, separate from mutual funds, was also a clear sign of PMS importance as a distinct professional service. Fast forward to 2024, and India's GDP has reached around US $3.9 trillion, marking almost a seven-fold expansion since 1993 and cementing its place among the world's top 5 economies. That surge has also powered a boom in private wealth. The count of high net worth individuals and ultra HNI is increasing year on year. In this environment, standardized investment strategies may not satisfy needs of investors, the needs of customized risk profiling, high conviction opportunities, and built-in downside protection. That is precisely where PMS comes in. You do not merely offer access to markets, you provide one-on-one management that aligns client portfolios with their risk appetite, time horizon, and financial objectives, backed with full transparency and performance-linked fees. Let me take you through some of the numbers and what this signals for the industry. The number of registered portfolio managers rose from 361 at the end of FY 2021 to 479 as of June 30, 2025, showing steady ecosystem growth while maintaining quality. During the same period, the total client base grew at 12% CAGR, with discretionary PMS clients growing at 13% annually and now making up about 96% of all clients. Discretionary AUM, which is non-EPFO PF, grew 23% annually, indicating increased client preference to delegate active management of their portfolios. This AUM also makes up over 40% of the organically sourced AUM, a sign of client trust in the industry. Non-discretionary and advisory client counts have declined, but their AUMs have risen. This is indicated that substantial PMS client relationships still exist in these categories. But this growth comes with a mandate to maintain trust and professional conduct. Clients are entrusting you with their capital and their future. Any fall in governance standards will erode that trust. A question to ask yourself: how are you reinforcing this trust in your own client relationships? Let me come to the SEBI support to the PMS ecosystem. SEBI has worked with APMI to bring in a slew of reforms to support the evolution of the PMS industry. You have seen reforms aimed at ease of doing business, for example, streamlining the process to digitally onboard clients, simplification of disclosure documents, specifying clear guidelines on infrastructure adequacy, bringing PMS distributors under the oversight of APMI, selection of a secondary benchmark made optional, and issuance of consolidated guidance by way of master circulars. An operational manual for registration and post-registration activities is also available, reducing SEBI's average processing time from 74 days in FY 23-24 to 49 days in FY 24-25. These are not just administrative conveniences, they are enablers for you to focus on carrying out your core business of meeting client deliverables. While PMS caters to sophisticated investors, we have worked with APMI on reforms for protecting investor interest. Some of these reforms include norms for performance reporting and benchmarking, investment limits on related party transactions with prior client consent, disclosure of investor grievance data on PMS websites, mandatory fee calculation tool with high watermark, and most important, terms and conditions document. I'm sure you have several more asks from the regulator, and my team at SEBI is ready to work with you on the same. SEBI has formed a working group at APMI's request to address concerns of custodians, depositories, and other market participants. We look forward to their recommendations. And in the morning, I had an occasion to talk to APMI board members, and I got some very good ideas. And we must do that, including, for example, on, we are talking of digital onboarding, how it can be even made simpler, and so on. I would like to assure you that though the PMS regulations were completely overhauled in 2020, that will not act as a bar in developing a more optimal regulation. Role of APMI. Since its incorporation in 2021, APMI has enabled structured dialogue between the regulator and industry. This partnership has been a model of co-creation rather than top-down prescription. APMI has accelerated the implementation of SEBI's agenda for investor protection, regulation, and development for the PMS industry. I commend its office bearers, past and present, for their dedication. APMI's way forward is to position PMS as the preferred choice for informed investors. There is a need to demystify the product with investor education and awareness sessions with simplified content. APMI has to drive outreach programs to highlight the differentiated features of PMS and build trust among existing and prospective investors. The success of SEBI's supervision system for portfolio managers is dependent on accurate and timely data filed by all stakeholders. I must commend the efforts of the Off-Site Inspection Data Committee in APMI for streamlining the process. I urge APMI to continue its emphasis on maintaining data quality. Way ahead for the industry. Growing demand for customized wealth management outside of the traditional mutual fund space reflects investor sophistication. PMS's edge is its flexibility in delivering tailor-made strategies, but the industry must demonstrate that customization is a consistent capability, not just a slogan. You must ensure that clients understand the risk-return trade-offs, the bespoke nature of their mandate, and the advantage of directly owning underlying securities, benefits that pooled products may not match. Educating each client on their own unique risk appetite is the first step in building a truly diversified portfolio. Your client communications must be clear, eliminate ambiguity, communicate performance claims responsibly, and formally document any strategy changes. Many of your clients will have investments through mutual funds or other pooled vehicles. Your role is to complement these investments. By combining the benefits of mutual funds with the capabilities of PMS, investors in India can build portfolios that are both resilient and differentiated. APMI and the industry must curb misleading claims being made by a few registered portfolio managers. Such exaggerated performance claims undermine trust and could stall growth of this industry. The PMS industry needs to modernize onboarding, reporting, and client engagement through digital solutions to stay competitive and trusted. SEBI's tech-enabled supervision also puts onus on portfolio managers and their ecosystem to embrace technology. In closing, I remind you that PMS industry is at an inflection point. You have a powerful position in place, a flexible regulatory framework, active industry engagement through APMI, and a rising pool of informed investors. Sustained growth will depend on innovation, process strengthening, technology investment, and keeping clients' interests central. As APMI enters its fourth year, we at SEBI remain committed to shaping a forward-looking regulatory framework that exemplifies collaboration and innovation. Thank you all. Jai Hind.
Thank you so much, Sri Pandey. Thank you for your insights, for your time, for clearly reminding all of us as a community why PMS is in focus, and for also giving us insights into how we can get a distinct edge in the future. Thank you so much for joining us. So I'm going to request you to please come center stage and invite Mr. Biharlal Deora on stage to kindly present a token of our appreciation on behalf of APMI. So request you to kindly accept this as a token of our gratitude. Let's have a thunderous round of applause, ladies and gentlemen. Thank you, sir, for SEBI's ongoing commitment in strengthening the PMS space. We're going to take back from you, sir. I'm going to request you to stay with me for a few more seconds. I'm sorry, I know you have to move on to other commitments, so we're going to make most of your time in inviting all the board members on stage. We'd like to capture a group photograph with Sri Pandey, requesting all the board members to please join us on stage. All right, we've got our perfect shot. Everyone, please stay with me on stage. We have two quick things on our agenda while I have you here. One is that we make the most of this opportunity and request Shri Tuhin Pandey to kindly unveil the annual report of APMI. Can we have the annual report on stage, please? It's one document that I know every single person in the room is really looking forward to. Sri Pandey unveils it. Thank you so much, sir, for doing the honors. Thank you very much. Okay, we've captured this perfectly. Thank you very much, sir, for doing the honors. One last thing before we let you go is that joining us today on this dais are 4 board members who will be closing their 3-year term. They're from the cohort 2022-2025. 4 members actually, and we'd like to take this opportunity, take this moment to pause and offer them our gratitude and also present them with a memento so that remains with them. And of course, 2 of them, Ms. Amisha Vora and Mr. Deora, I believe that you are ready for your next stint already, or we should just wish you all the best, no, for now? Wishing you all the best. Can we please have the trophies on stage? And Sri Pandey, I'd like to invite Ms. Amisha Vora forward. If you could please step forward, ma'am. And let's have a thunderous round of applause for Ms. Vora. Pandey sir, I'm going to request you to present the next memento to Mr. Bihari Lal Deora, who's also the current acting chairman of APMI. Also nominated to be back. All the best. Next, I'd like to invite forward Mr. Hiren Ved. Hiren sir, please step forward. Many congratulations on your successful term with APMI. And finally, Mr. Sonal Minhas. On behalf of APMI and the entire community here, thank you so much. All right, and with that, sir, we're going to allow you to move on to your commitments for the day. Can we have a thunderous round of applause once again for Shri Tuhin Pandey. Thank you for your leadership, which continues to shape the future. Thank you to all of our board members. Many congratulations and all the best. All right, everyone, please stay glued to your seats because now it is time for me to welcome to the stage our guest of honor for this morning. He is a stalwart in India's financial markets. As someone who has been personally looking at the revamping of India's modern capital markets, I call him the chief architect of it. He was instrumental in setting up the NSE in its early days. Later on, he played a very key leadership role at BSE. He is credited with introducing several path-breaking technologies and frameworks that have made our Indian markets faster, more efficient, most importantly, made us globally competitive. Now, under his leadership, NSE is leading from the front. They're driving market innovation. They're strengthening investor trust. They're building an inclusive financial access. And it's an honor for us to invite him on the stage and understand his perspective on how PMS space can sharpen its edge in this ever-evolving landscape. Please join me in welcoming him on stage. Managing Director, CEO at NSE, Shri Ashish Kumar Chauhan.
Shri Tuhin Kanta Pandey ji, Chairman SEBI, Shri Bihari Lal Deora, leadership and members of APMI, friends from the PMS industry, representatives from capital market participants, media personnel, ladies and gentlemen, good morning to all of you. It's a privilege to address the distinguished members of the Portfolio Management Services community once again. I extend my sincere thanks to APMI for inviting me to speak at this prestigious forum for the second consecutive year. It's always a pleasure to engage with such a dynamic and forward-looking group, the custodians of long-term wealth, drivers of innovation, and stewards of trust in India's financial system. This conclave is not just a celebration of the PMS industry's achievements. It is also a reflection point, a moment to reaffirm the collective responsibility we all share in shaping India's investment future. We stand at a decisive juncture. The PMS industry, once a niche offering for a few, is rapidly transforming into a strategic pillar of India's wealth management architecture. We are witnessing a remarkable era of economic transformation. India today stands proudly as the fourth largest economy and the fourth largest capital markets in the world. These achievements reflect the deep institutional reforms, macroeconomic stability, and increasing investor participation that underpin our capital markets. The Union Budget for financial year 25-26 further builds on this momentum. It combines continued fiscal prudence with developed focused measures, increasing capital expenditure while also offering significant tax relief. This fuels growth, expands financial savings, and opens new avenues for wealth creators via the capital markets. The story of the PMS industry is deeply intertwined with India's broader liberalization journey. What began in early 90s as a bespoke offering for high net worth individuals and institutions has today matured into a full-fledged industry with close to 500 registered portfolio managers across the country. This growth parallels the transformation of India's capital markets, particularly the journey of NSE that began in 1994 when we started our operations. As NSE introduced modern, transparent, and technology-driven infrastructure, it laid the foundation for the PMS ecosystem to flourish. Our innovations, from electronic trading to benchmark indices like Nifty, have become essential tools for PMS managers in designing, evaluating, and delivering investor-centric strategies. The market capitalization of India increased 125 times since NSE started operations, and now it has reached 445 lakh crore or $5 trillion plus. Institutions like NSDL, NCL, and many others that NSE helped set up have helped bring certainty, lower cost, and enhance ease of doing business. India's market has been a strong avenue for wealth creation over the last 30 years. Estimates suggest household wealth accretion of 46 lakh crore in last 5 years alone, from 21 financial year to 25 financial year. Nifty, which turned 29 years this year, has grown by 8% CAGR in US dollar terms, which is very similar to S&P 500, which has also yielded similar numbers, 8%, over the same years or same period. Just as NSE has grown India's investor base, the PMS industry has evolved from a niche product into a strategic pillar of India's wealth architecture. This shared journey reflects a common mission to democratize investing, deepen market trust, and build financial resilience for Indian households. Beyond portfolio returns, PMS investments directly contribute to entrepreneurial growth, industrial expansion, and infrastructure development. Every PMS portfolio not only nurtures wealth for clients, but also fuels economic activity and creates jobs for many. The PMS industry has experienced extraordinary growth in the past 2 years, with assets under management doubling from 2.86 lakh crore in April 23 to 5.6 lakh crore as of June 25. This has been driven by three key forces. With over 8.5 lakh high net worth individuals in India, the demand for customized alpha-driven wealth solutions is growing rapidly. So rising HNIs and UHNIs have been the major force behind this. The digitization has also improved every aspect from onboarding to reporting, making PMS more transparent, accessible, and scalable. Today morning, we heard also some requests to reduce more friction, which we'll work on. Regulatory support that has been there on standardized reporting, disclosure templates, and suitability norms that have also brought in more investor trust in the products that you offer. I especially acknowledge SEBI for sustained visionary leadership in shaping the evolution of India's PMS industry. SEBI's balanced approach has been instrumental in fostering innovation while safeguarding investor interest. Initiatives such as standardized disclosure templates, performance reporting norms, suitability framework, and free transparency mandates have laid a strong foundation for long-term sustainable growth. Under the leadership of the new chairman SEBI, Shri Tuhin Kanta Pandey, SEBI's resolve to deepen markets, enhance governance, and improve ease of doing business has further strengthened. Complementing SEBI's efforts is APMI's strong role in industry building. APMI has provided valuable leadership through self-regulation, operational alignment, and policy advocacy. Initiatives like the compliance calendar, standardized templates, and thoughtful policy submissions have created a better operating environment for portfolio managers. APMI's knowledge sharing forums, including seminars, white papers, etc., are fostering continuous learning across the community. Most importantly, APMI has nurtured a collaborative culture, a key enabler as the industry grows in scale and complexity. At NSE, our mission is to enhance trust and deepen markets by providing world-class infrastructure, data, analytics. We serve over 11.8 crore unique investors holding more than 23 crore investor accounts and reaching 99.85% of India's PIN codes, barring 28. Out of that, at least 25 are airports where we can't do KYC. In the PMS space, we support the industry through robust benchmarking with the Nifty family of indices, continuous index innovation, aligned to India's growth themes and reliable valuation tools that enable multi-asset portfolio construction. Of course, we give you the best order matching system in the world, and now in at least one segment we have recently started experimenting where we are getting response time of nanoseconds and not microseconds. 1 second has 1000 milliseconds, 10 lakh microseconds, and 100 crore nanoseconds. So we are now getting into the nanosecond response time world in India. The rest of the world is still talking in hundreds of microseconds in the best possible industries. We also give you, of course, a fair, efficient, transparent, and the lowest cost trading system in the world. And of course, for your business and also investors' interest, the corporate governance standards of India are amongst the best, especially in favor of the outsiders vis-a-vis insiders. The biggest issue in most capital markets is to basically work towards creating symmetry out of asymmetry. The corporates are inherently asymmetric situations where insiders have more information and more power. The Indian corporate governance framework led by SEBI has ensured over 30 years that today we are amongst the most symmetric framework compared to anywhere in the world. We understand that many of you rely on this, especially corporate governance framework, not just for compliance but as strategic enablers. We remain committed to empowering the PMS industry with trusted, forward-looking solutions. Our company NSE data and index is at your service in that direction. And let me now turn to the trends that will shape the next phase of evolution in PMS. The theme-based and sectoral strategies are gaining ground, from AI to energy transition. Investors are aligning with mega trends, and PMS managers are innovating to meet these expectations. Customized discretionary PMS is becoming the norm. Strategies tailored to specific goals, life stages, and risk profiles are enabling more meaningful wealth solutions. Technology integration is redefining engagement. Digital onboarding, real-time dashboards, and AI-powered insights are becoming standard practice. We are also working on giving some of these comparisons for some of the participants, especially from your industry also going forward. SEBI has just allowed us to partner with some of the credit rating agencies to give this comparable frameworks. So as and when we come back with more details and also launch, we'll come back to you. Regional expansion is a major growth driver. Tier 2 and Tier 3 cities are emerging as new centers of wealth creation. Vernacular communication, regional partnerships, and localized engagement will be key to unlocking the next growth wave. I think AI is going to help you translate some of this multilingual situations very fast without mistakes. Global access via GIFT IFSC, many of you might not have explored, but it's going to be a game changer with the inauguration of the NSE SGX Connect by Honorable Prime Minister Shri Narendra Modi ji. Offshore Nifty volumes were brought onshore every month. It's doing now more than $100 billion of futures in Nifty. And GIFT City now allows PMS firms to launch global investment mandates, serve NRI and offshore clients, offer dollar-denominated and multi-asset products under a globally credible framework. NSE International Exchange is also going to start through its subsidiary, which has been approved recently, to allow you from GIFT City the access across the world in almost all markets, using a single screen and a single way to trade, clear, and settle. PMS can be offered through GIFT City for both inbound and outbound investment opportunities. As I said, NSE will soon start global access services, which will enable PMS providers to access most international exchanges and markets in a safe, secure manner, as the NSE Global Access subsidiary will be regulated offering under IFSCA's Global Access Framework. This will further democratize both Indian entities offering PMS and GIFT entities offering PMS to access full range of products across the globe. I urge all of you to explore full potential of this new framework that is coming up. The growth of PMS must be underpinned by trust, innovation, and responsibility. Going forward, the PMS industry should evolve into multi-asset platform, integrate with digital wealth ecosystems, innovate across equity, debt, global and ESG themes, support regulatory maturity and policy stability, uphold transparency, disclosure and investor centricity. And above all, we must not lose sight of the core duty to the investors. This industry is not about chasing returns alone. It's about managing aspirations, guiding wealth, building legacies, and most importantly, maintaining the trust that you have already created. When I addressed this conclave last year, I closed with a message that still resonates, that you are the Krishna, the guide and keeper of wealth of our investing population. You are not just portfolio managers, you are navigators of complexity, architects of long-term success, and custodians of intergenerational trust. An informed investor is the most powerful ally for any financial ecosystem. Let us make investor education our collective social responsibility. As we move towards a Viksit Bharat, with SEBI's regulatory leadership, APMI's industry stewardship, and NSE's enabling infrastructure, we are well positioned to build a globally respected PMS ecosystem serving both Bharat and the world. I would like to conclude by congratulating all of you once again for this incredible journey, and especially the APMI board member, the outgoing president, and everyone else. Let's commit to build a future where PMS is not just about managing money, but about managing trust and aspirations. Thank you. Jai Hind.
Ashish ji, thank you so much. Please stay with me, sir. Thank you for sharing your thoughts with us. Thank you for the continued support. Like you said, the NSE infrastructure, we really, really value your presence here and your insights as well. I'd like to invite Vice Chairman APMI, Mr. Sushant Bhansali, on stage to kindly present a token of our gratitude to Sri Ashish Kumar Chauhan on behalf of APMI and the entire community over here. We are very grateful, very grateful, sir, for the time that you've spent with us here this morning and for bringing us up to speed of the maiden edition of APMI Compendium. This is a comprehensive monthly newsletter. We thank SEBI for providing us consolidated data. This is surely going to act as the industry's torchbearers, give us data analytics, help us gauge market depth, a ready reckoner for the entire PMS community, and now it belongs to all of you. Ashish sir, thank you so much for doing the honors. Have a phenomenal day, sir. Thank you very much. Mr. Bhansali, thank you so much. Okay, so that was our chief guest and our guest of honor, giving us some incredible perspectives on where we stand as a community, where India's capital markets stand, and the future that we can not just look forward to, but be very eager and excited about. I'm going to request my team to kindly set up the stage. You know why? Because coming up next is our very first knowledge session. This is the one you don't want to miss. Because what all of us in the room regularly do as portfolio managers is ask questions to our investors and potential investors to really figure out what is their goal and at what speed do they want to reach it. So this next session is really at the heart of every investor decision making. It's titled 5 Questions to Ask Your Portfolio Manager. Let's turn tables. It's about empowering our investors to engage better, asking sharper questions, understanding the very fundamentals of what makes a PMS relationship work better and more efficiently. On this panel, we have voices that you want to hear, so everyone please keep your pen, paper, or your digital notebook handy. Moderating this session is one of the most articulate voices that we know. in India's investor education and wealth commentary today. I've personally had the pleasure of listening to several panels moderated by him, and he's here to ask some of the most pertinent questions on behalf of all of us. Personal Finance Editor at Mint, Mr. Neil Borate. Let's hear it for Neil. Thank you, Neil, for joining us here. Please pick your favorite seat. And now let's invite our high-impact panel on stage. Mr. Darshan Engineer, Chief Investment Officer at Narottam Seksaria Family Office, who brings decades of experience in managing family office portfolios with a long-term value lens. Mr. Rajmohan Krishnan, Principal Founder and Managing Director of Entrust Family Office. They have a very client-centric approach and deep expertise in estate planning, succession, impact investing, and they've been managing wealth for several Forbes top 100 Indian families. And we also have Ms. Meenal Goel, representing Family Care Limited, brings a business owner's perspective to portfolio decisions, risk tolerance, and aligning personal wealth with business cycles. Can we have a huge impact round of applause so that they give us the best insights? Welcome to all of our panelists. Please take your seat. And Neil, over to you.
Hello, everyone. So, an unnamed source told me that don't ask tough questions. And my reply was, of course, the audience will ask tough questions. So, I'm not going to take up your precious time, because ultimately you are in this business and you have tons of questions from family offices, from the main investors in portfolio, in PMS. So the first half I will ask, and I will be very strict about the timing. I'll hand it over to you guys. So please be ready and take this chance to ask your questions. All right, so let's begin with the main reason why anyone chooses a particular PMS, which is the strategy, right? There's something about that PMS, about the manager, that is attractive, that's interesting. So if I might persuade my panel to go down and tell us about how they look at individual strategies, how they pick them.
Thank you for the opportunity to, explain our point of view. But we clearly believe that there is a lot of merit in having PMS managers, associated family offices of our kind. There is clearly a talent pool which we need to bring on. It's not possible for us to get such bright minds to necessarily work for us, but we can work with them through an allocation in some of the products that they do. So I think there's an immense value add that they bring to our table. Besides just an allocation, there's a learning that we have. For example, we just heard the CEO of NSE speak about new mega trends. I think a family office might be constrained in the ability to bring so much knowledge on the table or learning on their own, internalize them. It's important to have a PMS manager who understands this better, trains, of course, his reflection of his position allows us to better understand that. So I think clearly a significant value add, and it's an asset class which has done very well for us, and we've been significant beneficiaries of the knowledge that they brought on the table for us.
Sure. But can you give us some numbers, Darshan? Like how many PMSs do you pick, and how do you ensure, is it value, growth, like you split across styles?
To give you a number, so we've been in this, we've been allocating money for a bit. We have vintages which are as old as about 15 years with us now, relationships. We keep constantly onboarding people who bring relevant skill sets to our table. And I don't necessarily, so there's clearly a gap that we have. So we believe growth and CIMID, that small mid-cap space, emerging mega trends, clearly are skill sets that we don't have internally. We necessarily need to onboard them. So we necessarily go and reach out to those people who we believe represent that. And we take our chances with them. But so far, the journey has been very productive and very fruitful for us.
All right. Meenal, can you outline your approach?
Hi everyone. So I work at Family Care. Thank you so much for the opportunity here. Just to let you know, working in one of the largest family office and having our own research team in-house, there is always one challenge which we face is having crossed all the sectors and all the stocks. And this problem can only be solved by a PMS fund manager. For example, we have a team who manages micro cap and small cap stocks. However, it is very difficult, and we have understood over a period of time that it is very difficult to outperform Nifty 50. But there are a lot of fund managers in the industry who are able to do the job. For example, one of my favorite fund manager, Mr. Hiren Ved, Vikas Kemani, we have seen them over a period of time where they are able to outperform the markets. So the key reason to have, meeting new fund managers over a period of time is very important for you to allocate your money to them. So, yeah.
And same thing, some numbers if you can share with us.
Sure. So as at present we have approximately 15 to 16 in-house PMSs, but we keep evaluating new PMSs, especially small boutique houses, for example, which have a small AUM of 300 to 500 crore, because that's the space where you get a lot of knowledge sharing, and that's something we are comfortable with.
Oh, that's interesting. So you don't go too high, you don't want a very large PMS.
Because I think sometimes AUM also becomes a problem for PMS fund houses, and we would, since the book size is so big, it is so diversified, some small boutique PMS houses creates greater alpha for us.
And just to round that off, so do you also decide beforehand your overall sector split or your preference for mid or small cap stocks?
Correct. So since in-house is being managed, which is small cap and micro cap, we would go to fund managers with more of large cap and mid cap, where creating alpha is very, very difficult. And I think giving your money in the right hands always help us do that.
Rajman, can you outline your approach?
So, good afternoon. So we are we do a dual role. We are a registered PMS provider, as well as we are an investment advisor. So our the thought process is to keep it very simple, and we have been doing this for the last about 13 years. So we take utmost caution when we select PMS managers. Specifically, our main thesis is, if you want to do a large cap or a large and mid cap, we prefer mutual funds, and we would not go to a PMS manager for that. And we track themes. We have in-house research, and we track themes, and once we are comfortable with the theme, we go to certain PMS managers and find out if they can do something customized for the theme. And can you
give us examples of themes that you've been bullish on?
So we did, in 2021, we did manufacturing and capital goods. And in the last about 3-4 years, it has done extremely well for us. And we went to ICICI and we spoke to them. We said, saying that this is the universe which we want. And so we work very closely with the fund manager. And we have some idea in terms of saying that what stocks which needs to be picked and what can't be picked. And in certain cases, we have rejected certain stocks. And it's not that we interfere too much, but at least we need to have a veto when a particular stock comes. And we also did a dividend yield theme in the same time. And specifically, overall, if you look at our, in the last, as more than 10 plus years, we have had only about 4-5 PMSs. Yeah, we've been very selective. Yeah.
And you remain bullish on those themes, or now has it changed going forward?
It has definitely changed because we have exited most of it. And yeah, so in fact, we identify themes and then we get in. Yeah. Yeah.
Could you share some future themes that you've identified, or?
Actually, not yet, actually. So we are in the process, yeah, yeah.
All right. Now the next super important thing, especially from a family office point of view, is the expense and how they see a fair kind of structure for management fee, performance fee, and so on. So if you can start with Darshan again.
So, we don't necessarily debate too much about expenses when we are onboarding skill, because the skill will pay for it any which case. we probably spend some time, where a discussion around a hurdle is. And our question to them would be that, if the cost of equity or, the earnings growth in this country at about, upwards of 12%, which is really what you've been penciling to me, then the hurdle has to effectively start from there. And we're very happy sharing profits with them. So we don't necessarily bring, the cost associated with investing into that strategy as a key driver of any decision, because if I'm going to onboard a skill sets, I think it's going to allow me to internalize that and probably use that capacity on my others. It could be my credit allocations, it could be my private equity exposures. We're able to use the intelligence that they bring on table. So we don't necessarily dwell too much on costs. I think it's a lovely thing. I think some of the guys who I know are looking at me. I'm going to get a drink today from them. Thank you very much. But that's how we look at it. We don't think it's so important.
But Darshan, in that whole debate between
Sure.
a fixed management fee and performance fee, what do you think is more aligned? What do you prefer?
I would love them to share the upside with me. It's going to incentivize them. I think they're going to bring tremendous amount of value to my table if they're going to share it with me. So I'm all for sharing with them. I'm only going to ask them and request them that let's examine the hurdle carefully. It should allow me to cover earnings growth, which the markets are anyways promising. B, it should reflect a reasonable cost of equity, risk that comes with it, and happy to share with them.
So a high enough hurdle that makes sense for you?
You would think that that number should be a meaningful spread over the risk-free.
A meaningful
A meaningful spread over the risk-free, like the risk-free in India is about 630, maybe a reasonable spread over 630 should be where the hurdle should be, and happy to split about that.
Something like a 10%.
I think it's not low.
Okay.
12, 14.
Okay. You're making life hard for them, yeah? Meera?
Yeah, so sorry. Since I work at a Marwari family office, expense plays a very important role for us. Because, okay, let's be honest, a 1% management fees, where there's such a big AUM, and we know we are going to stay invested with that fund manager for 10 years or 12 years. So that 1% fixed management fees getting compounded for 10% does take a hit on your return. But contradictory to that, we believe that PMS also offers you sophistication, right? For example, our family office, we believe we do not invest in alcohol companies or non-vegetarian companies. So while you're filling a PMS form, we get that opportunity to take, okay, please don't take stakes in that. Whereas if I look at a mutual fund who is able to do that job in 60 or 70 basis points, we do not get that customization. So expense does play a role, but we also understand there is customization which comes in hand with us for a PMS fund manager. And yeah.
So you also prefer the performance fee side of things?
Yeah, we are very happy to take the performance fees. However, a 50 bips management fees and then a profit sharing is ideally which would be preferred in-house.
And what's your hurdle rate?
It would be 15%.
Fair. Actually, this is an interesting point in terms of mandates that you can customize with PMS. Darshan, do you also have mandates that you say the PMS should not invest in these sectors or?
So it's not because we have any opinion on that sector. It's probably more to reflect with the principal's personal preference. It could be, tobacco in our case, but that's really where it is. We don't necessarily, we are very happy to give them a free hand because the mandate is an allocation to investing in equity, and I'm sure they're the best judges of it. Because we clearly think they're better than us, which is why we're giving them the money. So I'm happy to give them a free hand. It's a principal's preference not to invest in tobacco, but that's more personal than anything else. It's not because we have an opinion on that industry.
So it's not a red line for you?
No, that's no red line for us.
Okay. Rajmohan?
So for us, it's slightly different. We look at strategies mainly to define the fee structure. So if it's a very, very differentiated strategy and the stock picking becomes extremely critical for us, then we don't mind actually working in a profit share. But whereas if it's a very kind of a run-of-the-mill strategy, say, for example, if it's going to be a mid and large cap, I don't think paying profit share is going to make any sense. So we would prefer, and since we are custodians of client money, we are very cognizant about the fee structure, and we negotiate, and we work with the fixed fee most of the time. Yeah.
It's interesting. It's a departure from some of the other voices. But at what point would you do a performance fee?
No, so that's what I said. So it is, performance fee is purely based on, I would say, a very differentiated small cap strategy or a differentiated theme where the fund manager has to break his head to understand what kind of stocks he needs to pick, where it's not easy to kind of manage set portfolios. But whereas if it's a very kind of a standard portfolio, then it's better to go with fixed fee. Yeah.
Fair.
Yeah.
And what's your hurdle rate?
So we'd be comfortable with anywhere between 12-13%. Yeah.
And do you have red lines also in terms of sectors, themes, kind of stocks you won't allow the PMS to invest in?
Not really. Yeah. We give full freedom. Yeah. Yeah. Yeah.
Okay. I'll stay with you on the next question, which is about risk. So typically PMS is posited as a vehicle where you can take more. Excellent. We've been given more time. This is one of the very unusual things to happen in an event where we get more rather than less time. So, coming to the risk question, unlike a mutual fund where there's a 10% cap on allocation to an individual stock in PMS, there is no such regulation. So, do you see concentration as a big pull factor?
See, concentration has again, it's very client specific, right? And particularly when you're not handling retail clients and large corpuses if he needs to manage, risk plays a very, very important role. And the client preferences plays a very important role. So there are clients who are willing to bet on like concentrated strategies, where then they're very cognizant of the risk which is there with respect to the portfolio. But so we are very fine, but it's very client specific, I would say.
Okay. Meenal?
So so concentration risk is always there and we are aware of it. But apart only from concentration risk, there are a few other risks which is very important while you're deciding a PMS fund manager. At least at this stage, it is very difficult to make money in the market side. That's what we are all aware of. Like macroeconomic risk is increasing day by day. Sometimes we have Trump tariff, we have some Ukraine-Russia war going on, we have India-Pakistan war going on. So that's one major risk. Second, talking about your concentration risk.
Sorry, so how do you deal with that risk when you select PMSs?
So, for example, there is nothing you can do about about the geopolitical risk which is going on. However, fund managers going for specific themes. For example, we had the Motilal Defense Fund system. We had HDFC bringing up with a defense fund. Now we are well aware that manufacturing and consumer is going to play a theme. So we will, in that duration, in that period of time, we will go with theme-based funds rather than a very long period of, investments.
Okay. And so that's about macro. Concentration, what's your solution?
For concentration risk, we would definitely talk with the fund manager as in why he wants to get heavily weighted on one single sector or one single theme. If we feel we are comfortable with that, we are definitely okay to go with that sector.
Sure. But in general, is that an attractive feature of PMS? Why you would go into it to begin with? That unlike a mutual fund, there are fewer regulations to deal with on diversification?
No, that will not be an attraction center for us. That will be definitely a question as to why he wants to go concentrated in a portfolio. We would be more okay with a flexi cap sort of portfolio rather than a concentrated portfolio. Yeah.
Okay. Darshan, any thoughts?
So Neil, I'll just first, just articulate what we do. So one is we are a public markets, equities, fixed income group. We take risk associated investing in these asset classes. So that's a starting point. So when we allocate monies to an equity manager, we expect him to think of this as an allocation to equity in its totality. We are not necessarily asking him to take cash calls on our behalf. We believe that we will take cash calls on our behalf internally. We do not necessarily put any sectoral caps on them because because I thought they're better than me or because we think they bring a certain skill set to the table, which is really why we are allocating the monies to them. So we are going to allow them a free hand, but I'm going to, just to give you a little number, so we decided to sum total or sum up all the individual stocks that we would have internally